Hello everyone. Welcome to Rich Ripples. Have you ever heard of an emergency fund? If not, you've come to the right place. An emergency fund is a key part of a secure financial future and something everyone should have in place. In this video, we'll explain what an emergency fund is, why it's important, and how to go about setting one up. You'll also learn the benefits of having an emergency fund and how it can help you achieve financial stability. So if you're interested in taking control of your finances, read on to find out everything you need to know about an emergency fund. On this channel, I will discuss what emergency funds are. Stay tuned and thank you. What is an emergency fund? An emergency fund is a designated savings account that allows you to set aside money for unexpected expenses or emergencies. It's an important part of any financial plan and can help keep you from going into debt if the unexpected happens. Why do I need an emergency fund? Having an emergency fund is important for a number of reasons. It helps protect you and your family from the financial impact of unexpected emergencies like job loss, medical bills, car repairs, or other major expenses. It also provides peace of mind knowing that you have money available in case of an emergency. How much should I save in my emergency fund? Most financial experts recommend having enough in your emergency fund to cover at least 3 to 6 months of essential living expenses. That includes basic necessities such as rent/mortgage payments, food, utilities, transportation costs, insurance premiums, and other unavoidable expenses. The amount you need to save depends on your individual circumstances and can vary based on how secure your job is and how much you have saved in other accounts. Where should I keep my emergency fund? Ideally, you should keep your emergency fund in a separate bank account from your everyday checking account. This will help ensure that it's readily available if you need it, but not so easy to access that you're tempted to dip into it for non-high-yield purchases. High-yield savings accounts, certificates of deposit, CDs, and money market accounts are all great options for storing an emergency fund. Make sure to shop around and compare rates to get the best deal possible. What if I don't have an emergency fund? If you don't have an emergency fund, setting one up would be the best thing you could do in the next few weeks. Prioritize saving even small amounts every month until you reach your goal. Cutting back on non-essential spending and taking on extra work can also help you get there faster. If an emergency strikes and you don't have the funds saved, try to find other ways to pay for it, such as using credit cards with low interest rates, borrowing from friends and family, or using a personal loan. An emergency fund is an essential part of any financial plan and can help keep you from going into debt in the event of an unexpected expense. Make sure to save enough money each month in a separate account to prepare you for an emergency. To determine how much you should save, use the 3 to 6 month rule, which recommends having 3 to 6 months worth of living expenses saved. Consider shopping around for different banks to find high-yield savings accounts, CDs, and money market accounts to get the best rate for your emergency fund. If you're already struggling financially without an emergency fund, take on extra work or cut back on non-essential spending to help build up your funds faster. Lastly, be aware of alternative ways to pay for an unexpected expense, such as using credit cards with low interest rates or asking family or friends for loans. No matter what, having an emergency fund is key in helping prevent unwanted financial strain during difficult times. Thanks for watching. For more views and updates about what emergency funds are, subscribe to our YouTube channel and stay tuned. Thank you.